Have you noticed what's happening in Manchester right now? Property prices here are averaging £272,000, while London's still sitting at £535,000. But here's the twist. Manchester is projected to grow nearly 20% over the next few years, while London investors are bracing for stagnation. Let me ask you, are you still chasing capital growth in overpriced markets? Or are you ready to look where the smart money's going? I've been in real estate for over a decade, and I'll tell you this. When you see global firms like Amazon and Google setting up shop, when you hear about £10 billion regeneration projects, you don't wait around. You act. And in this video, we'll break down why high net worth investors from the US, UK, Australia, and Canada are quietly shifting north. You'll get the data, the trends, and my insights as a property investor myself, so you can decide if Manchester is where your next big move should be. And check this out. Rental yields, Manchester versus London, 2025. Manchester's delivering 6.9% yields, while London's stuck below 3%. Stick with me and I'll show you exactly where the next opportunities are unfolding, why Manchester is outperforming London, and what smart investors are doing about it. Affordability that doesn't sacrifice growth potential. Now, let's start with something that every investor cares about, the numbers. Manchester's average property price in 2025 is around £272,000, while London is still hovering at £535,000. That's less than half the entry point for investors. But here's where it gets interesting. Manchester isn't just cheaper, it's growing faster. Experts from JLL are predicting a 19.3% cumulative price growth by 2028. Compare that to London's 17.1% forecast, and you start to see why investors are calling this a value play. I had a conversation last month with Mark Evans, a seasoned property investor based in London. He told me, "I pulled out of central London entirely last year. The yields weren't stacking up and capital appreciation was slowing. Manchester? That's where I'm doubling down now." And he's not alone. He's not. According to Zoopla's latest ranking, London's market is beginning to plateau, while cities like Manchester are leading the 29.4% regional growth forecasts for the Northwest. Take a look at this chart. Projected price growth, Manchester versus London, 2024 to 2028. But affordability isn't just about entry prices. It's about better yields, too. Manchester's average rental yield sits at 6.9% compared to London's 2.9%. That's more than double the return on rental income. In Sydney, investors are grappling with yields barely hitting 3% in premium suburbs. And in New York, Manhattan's rental yields rarely top 3.5%, even in hot neighborhoods like Soho. For those looking for cash flow and appreciation, Manchester offers a rare balance. A booming economy driving demand. Let's talk about what's fueling this growth. Manchester's economy has expanded by 240% since 2000, and projections show an additional $7.5 billion boost by 2026. Unlike London, where high costs are pushing businesses away, Manchester is attracting global giants. We're talking Amazon, Google, and the BBC, all expanding their operations in the city. And it's not just the tech titans. The Greater Manchester Growth and Prevention Delivery Plan, worth £10 billion, is regenerating all 10 boroughs of the city. This isn't some abstract promise. It's translating into 65,000 new jobs by 2040, particularly in high-paying sectors like tech, media, and healthcare. If you've invested in cities like Miami during its tech boom in 2020, you'll understand the significance. Back then, job growth in Miami fueled a surge in property prices, up 38% in some areas within just 3 years. Manchester is following a similar trajectory. And check this out. Job growth forecast. Greater Manchester, 2025-2040. The data speaks volumes. When jobs increase, demand for housing follows. Young professionals, particularly graduates from the University of Manchester, are choosing to stay. CityRise reports a 51.5% graduate retention rate, one of the highest in the UK. Population growth and an intensifying housing shortage. Population growth is the silent driver that many overlook. Greater Manchester's population hit 2.81 million in 2024 and is growing at 0.75% annually. The city center alone is expected to house 100,000 residents by 2026, but supply is lagging far behind. Only 2,402 homes were delivered in 2024, yet demand is skyrocketing. Even with 11,765 units under construction, it's nowhere near enough. For context, the UK needs 300,000 homes per year just to keep up with national demand. Manchester's share of that? It's falling short. I recently met with an Australian investor who owns 2 apartments in Manchester's northern quarter. He said, "Every time a tenant moves out, I've got 3 new applications within days. The demand is relentless. And that's driving up rents fast. Private rents hit $1,300 per month in January 2025, an 11.1% increase from the year before. And there's more to come. Forecasts suggest a 21.6% rise by 2027, outpacing the UK average of 15.9%. Take a look at this chart. Rental price growth, Manchester versus UK average, 2024-2027. Regeneration projects. Transforming the landscape. One of the big reasons Manchester is outperforming its southern counterparts? Regeneration on a scale the UK hasn't seen in years. The Northern Gateway, a $1.5 billion project, and Victoria North, valued at £4 billion, are delivering thousands of new homes and commercial spaces. But it's not just about the buildings. It's about community transformation. We've seen what large-scale regeneration can do. Take London's King's Cross, for example. After a $3 billion facelift, property prices in the area skyrocketed, some by 150% over a decade. Salford, just next door to Manchester's city centre, is following a similar path. Over the last 10 years, Salford has seen a 289% increase in property prices, largely thanks to the BBC's relocation and Media City UK's expansion. And connectivity? It's about to get a whole lot better. The HS2 rail link will cut travel times between Manchester and London, making it feasible for professionals to live in Manchester and work in the capital. And check this out. HS2 impact on travel times, Manchester to London, pre versus post HS2. Rental yields that make London look tame. For yield-focused investors, Manchester is a game changer. We're talking 6-7% rental yields in neighborhoods like Ancoats in the northern quarter. In comparison, London's prime zones rarely offer more than 3%, and even outer suburbs cap out at 4% if you're lucky. Tenant demand in Manchester has doubled compared to pre-pandemic levels. This surge is driven by a young workforce, with 38% of residents under 25 and over 124,000 students studying in Greater Manchester every year. One Canadian investor I know recently purchased a duplex in Ancoats. He told me, "I was getting multiple offers from tenants within hours of listing. And when I compared yields to my properties in Toronto, Manchester was blowing them out of the water." And check this out. Rental yield comparison, Manchester versus London versus Toronto, 2025. When you can achieve yields of 6.9% with strong tenant retention and rising rents, it's hard to ignore the numbers. Why Manchester appeals to international investors. Right now, if you're based in the US, Canada, or Australia, Manchester's appeal is twofold. First, the currency advantage. With the pound sterling relatively weaker compared to the dollar or the Australian dollar, your money goes further. Second, favorable mortgage rates in 2024 and 2025 are creating an accessible financing environment. Zoopla reports improving loan-to-value ratios and lower borrowing costs in northern cities compared to London. But it's not just about access. It's about timing. We're seeing a north-south divide in the UK market. Manchester led the Northwest to a 5.3% growth rate in 2024, while London's recovery remains sluggish. And investor sentiment? Overseas buyers are flooding into Manchester. Select Property and Buy Association reports both show increased foreign interest, citing strong economic fundamentals and better yields. Take a look at this chart. Foreign investment growth. Manchester versus London, 2024 to 2025. Key risks and what you need to watch for. Now I'm going to level with you. As promising as Manchester looks, and trust me, I'm bullish on it, no market is without risks. One concern that comes up in nearly every conversation I have with fellow investors is oversupply. Right now, there are 11,765 new units in the pipeline. That's a lot of inventory hitting the market. But here's the thing. Demand is still outpacing supply, and we're seeing tenant applications double compared to pre-pandemic levels. Take a look at this chart. Rental demand versus new supply, Manchester 2020-2025. Another risk? Competition. More investors are eyeing Manchester now, both domestically and internationally. I had coffee last week with an investor from New York who joked, "Everywhere I turn, there's another North American buying up a flat in Manchester." Jokes aside, he's not wrong. If you wait too long, prices may creep up to the point where the yields start tightening. So if you're considering Manchester, timing is everything. And of course, there's the economic sensitivity. Any slowdown in job creation could affect demand, but Manchester's diverse sectors, tech, media, education, healthcare, give it more resilience than many other cities. When I compare this to what happened in places like San Francisco during its tech downturn, I'm cautiously optimistic Manchester has built a stronger safety net. Should you invest in Manchester now? Let's bring this home. We've covered a lot in this video, so here are the 5 key takeaways you need to remember. Affordable entry points with properties averaging £272,000 compared to London's sky-high prices. Rental yields between 6–7%, which outpace London, Sydney, Toronto, even New York. A booming economy fueled by £10 billion regeneration and major employers expanding, driving sustained housing demand. Chronic undersupply, creating upward pressure on prices and rents, with population growth fueling the fire. Massive regeneration projects like Victoria North and the Northern Gateway, transforming the city into the UK's next property hotspot. I always tell my clients, you make your money when you buy, not when you sell. And right now, Manchester is offering the kind of buying opportunity we haven't seen in the UK market in years. It reminds me of those who got into Brooklyn in the early 2000s, or Miami's design district before the boom. Those who waited missed out. Those who acted early? They're reaping the rewards today. What should you do next? So here's the big question. Are you going to wait on the sidelines and watch Manchester pass you by? Or are you going to be part of what could be the UK's most exciting property growth story of this decade? If you found value in today's insights, and I'm sure you did, don't just sit there. Hit that like button so more investors like you can get this information. Drop a comment and tell me, what's your biggest concern when investing in Manchester right now? Or maybe you've already got skin in the game. Let's talk about your strategy in the comments. And of course, subscribe to EstateScope. We've got more exclusive insights, data-driven strategies, and hyper-local analysis coming your way every single week. Trust me, you won't want to miss what's next. And check this out. Projected ROI, Manchester investment versus London investment, 2025 to 2030. If you're serious about maximizing your returns, Manchester should be on your radar right now.